Everyone, close your eyes. Don't cheat. And follow just my voice. You're working very hard in your office. Shelby, close your eyes. You're working very hard in your office, and all of a sudden there is a man with a dark suit and a big briefcase and telling you, I need to see your receipts for the last 5 years. And also I need to verify your home office. How do you feel? Open your eyes now.
Crap.
Stressed out.
Yes, you're stressed out.
Bring it on.
Bring it on. Oh, okay, there you go. There's a positive one. And he vehemently saying, bring it on. Vehemently said, bring it on. So you start to tremble, you panic. Because now you start to second guess yourself and says, my God, do I really have any receipts? Did I really have those receipts that I really claimed for? Do I have the right income and expenses? Oh my God, by the way, I forgot. My unemployed son is actually staying in my home office. Yikes, right? But folks, that's just a fallacy. It's a fantasy. It's not truthful. Only a small amount of business owners are getting audited each year. And if you are selected for an audit, you get a letter from the IRS, not a knock on your door. See, I told you. But to prepare for such an audit, it's always good to know some of the tips and strategies that could probably lead you to not getting audited. Correct? All right, so what's the first point? Always check your numbers. Check your numbers. If you're W-2 or 1099, always check the numbers to make sure you're reporting in the right form, in the right line, and do your basic math. Always make sure that you add and subtract whatever is necessary. But since we're only using all the tax software, it pretty much does all the job for us. Now, who does prepare their own audit, taxes? Raise your hands higher. Okay, there's 3. And who uses a tax professional? Majority of us. So if you're using a tax professional, make sure the tax professional is good. Because not everyone who claims they're tax professionals are really good. And sometimes it's really surprising when you sit down with them and they ask questions. It's like, why are you asking me this question? Sometimes you wonder. So always make sure that you make the right choice. Do not report any loss every year. So if you've been in business for 5 years, for God's sake, don't declare loss each year for the next 5 years. Because you know why? Because the IRS would consider your business as a hobby instead of a business. And the hobby obviously is reported under your Schedule A, and business is under your Schedule C if you're sole proprietorship. Always keep good records and make sure your income and expenses are accurate. Always keep good records. How do you keep good records? Anyone using a tax software, bookkeeping software? There's a lot of available software, even in your cell phone, where you can actually snap a photo of your receipts and it transposes that receipt into your general ledger. There's a lot of opportunities in there. And to minimize the risk of audit, just make sure you claim all your income and expenses accurately. If your expenses are high enough than your income, and you can actually prove those expenses, it's okay to report them. It's okay. That's the reason why I get audited all the time. Don't pay your employees or shareholders of the company high of a salary, especially in a closed corporation, or especially in a family corporation owned business, wherein dad and mom and son, daughter, niece, nephew, uncles, uncle, and aunties are all employees of the corporation. If you are a corporation, C corporation, not S, C corporation, do not pay your all your the employees or shareholders a high salary, because you know why? Then that would put a red flag by the IRS that you are trying to claim so much payroll so you would avoid paying taxes. Now, if you're an S corporation, that will be a different story. And that's probably where we fall most of the time. Now, do you know why? When you reach a certain amount of income, it's suggested that you become a corporation if you're self-employed. Anyone knows that magic number? Okay.
250.
Over 100 is correct, but there's a more accurate figure. If you earn at least 150,000 a year, it's a good idea to become an S corporation. I will explain more about S corporation, but I don't have time. Okay, and next one is always wary of independent contractors. Always understand the employee-independent contractor relationship based on the IRS rules. Sometimes, when we claim too many independent contractors and less employees, then the IRS would think, you know what? Maybe we need to take a look at these numbers. We need to take a look at the contracts to make sure that the independent contractors are actually employees of the corporation. And how can you determine if somebody is an employee versus an independent contractor? Anyone knows? Control. If someone, an employer, has control over the activities or the means that the person is accomplishing the task desired, then that is an employee. You can have 12 items in your contract or 20 items in your contract, and if it doesn't show any control, then you're good. But if it does show one control, for example, if they're carrying your business card with your logo and the name of the corporation, then there is control. They're actually representing your company. They cannot be independent contractors. Interesting, right? Now, only claim your home office deduction if you're entitled to. In the past, the IRS really scrutinizes home office deduction, but I guess lately they don't do now. But if you are actually having a chair here and a desk in one corner in your living room, can you take that as an office deduction?
Sure.
Yes.
No, absolutely not. It has to be in an enclosed room, and it's specifically designed for business only. If you have a TV there with a cable and you're watching football on the World Cup, you cannot use that room as a tax deduction. And most importantly, you need to make sure that don't claim too much maintenance and utilities in your home office, because that would raise a red flag as well. And last but not the least, if you think you are making $500, if you think you owe the IRS $500, make sure you pay your estimated taxes quarterly. Because if you can continue to do that year after year after year, they will soon pull your taxes and audit you to make sure that you're following the rules correctly. Anyone filing estimated taxes here? No. No, come on. You must be paying at least over $500 in taxes, right?
Yeah.
But you're required to pay estimated quarterly tax statements. Pay $125 each quarter. You'll be safe. The IRS will be happy. The rule of thumb is there's so many tax auditing strategies that you can actually read. You can go online. There's so many ways for you to be able to make sure that you're not a red flag. But the bottom line is, as long as you're honest in your income and your expenses, there's nothing to worry about. The IRS could come and audit you year after year after year. And that's the bottom line, folks. You're not scared anymore. Mr. Toastmaster?